Alphabet stock fell post-market around 7% in immediate reaction to fourth quarter earnings, where the company missed on revenue. Alphabet, Google's parent company, reported its fourth quarter 2024 earnings with mixed results. This is the Alphabet announcement for the fourth quarter and fiscal year 2024. And the revenue increased 12% year over year to $96.5 billion. The estimate was around $96.68 billion. So they missed on revenue. It's not a big miss, right? It's only 0.22%, but this scared the investors. And that's why the stock is down 7.57% after hours. Let's continue. Google services revenue increased 10% to $84.1 billion, reflecting the strong momentum across Google search and other YouTube ads. Alright, but there's a problem with the Google Cloud revenue, which increased only 30% to $12 billion, led by growth in Google Cloud Platform and other products, AI infrastructure, generative AI solutions. The problem right here is that the investors expected around 35% increase, so the cloud revenue slowed down. But that's not particular case for Google. This also happened to Microsoft. And if you just take a look, the Azure revenue, let me close this, saw a revenue of $25.5 billion, but the Wall Street expected $25.8 billion. $25.8 billion minus 25.5 equals 0.3, right? Divided by 25.8, so they missed by 1.16%. Total operating income increased 31% and operating margin expanded by 5% points to 32%, so that's good. And the net income increased 28% and also EPS 31%, which is really a great increase, right? So $2.15. Let's take a look at the EPS. It's $2.15 and the estimate was $2.13, right? So it's a bit, just a small bit, but if we just take a look into over the last years, so 2024 was in line with the expectations for the EPS, only a miss in 2022. Looking forward, it's expected to increase at a high rate, really that huge increase like it was from 2023 to 2024, but it should be a good one. Revenue, which also is supposed to increase by around $42 billion. 42 divided by 35 equals 12%. Alright, so the revenue and the EPS are expected to grow at around 12%. The CEO said that the fourth quarter was a strong quarter driven by our leadership in AI and momentum across the business. We are building, testing, and launching products and models faster than ever and making significant progress in compute and driving efficiencies. So that's a good statement. And what's really interesting is that we are confident about the opportunities ahead. And to accelerate our progress, we expect to invest approximately $75 billion in capital expenditures in 2025. That's a higher number than the Wall Street expected. Microsoft and Meta, where's that? Microsoft, yeah, right here. You can see that Microsoft is set to invest $80 billion in AI infrastructure, and Meta also between $60 to $65 billion. And that only means good news for me. As a conclusion, the EPS was in line with the estimates. The revenue slightly missed. Want to spend around $75 billion on the infrastructure, data centers, everything that will make them to respond to the high demand for the AI. And that's only good news because also the others big tech players do the same. Microsoft, Meta, they also invest a lot of money into the AI data centers. And maybe you question, okay, but is that really necessary? Because DeepSeek just came and you've seen the storm created on the market, but I think it's really necessary. And the demand for the infrastructure for the data centers will be and it will increase to a high rate in the future. Because if you have powerful GPUs, if you have the right infrastructure, the AI will just become better and better.